let's talk about money real quick, and then we're going to go into some of the other ways to start finding franchise brands. So I like people have $100,000 liquid, because a lot of the brands are probably $300,000 or less. Now there's some that are less expensive, 150, and you probably need 75,000 or, but I was talking to a broker the other day. Well, somebody came into the Facebook group the other day, and I knew a little bit more about their background because of the information that they filled out to come into the group. But they're like, hey, I've got this much net worth, which was not a lot, and I'm looking at getting an SBA loan, but they're going to they're going to tag my house as collateral for the loan, and my wife's not too thrilled about that, and there's a lot that goes in there, but people are just like, take the risk, do it, take the risk. And others were like, no, you're an idiot, don't do it. Wasn't quite that extreme, but I knew, so I could do a broker about it on their podcast. I was a guest on their podcast, and he said he's kind of got a rule of thumb: don't invest more than half of your net worth into a brand. And using that litmus test for this particular one, they shouldn't do it. Unless you're 19 years old or 20 years old. But, I just hate to see people get excited and getting sold and wanting that dream and leaving their current situation that they hate so bad that they're making a bad decision.
Yeah. No, I mean, I think that's extremely relevant, and it happens, right? People get excited, or a brand's moving quickly and they feel the pressure and they want to sign up, but you're absolutely right. Again, maybe if they're owner operator, maybe that's different for me, but if they're planning on hiring a general manager and going to spend and they're light on net worth and liquidity, or this is going to be more than half of their total, especially if it's a home, if it's not liquid capital they can access quickly, then again, there's always exceptions to the rule, but I think that's a great rule of thumb, is that you should spend more than half your net worth. And if you're under 100,000 liquidity, let's be honest, a franchise fee can be anywhere from 30 to 80 grand. That's going to eat up most of your liquid. That's typically coming from liquid capital that's required when you sign the franchise agreement. And then the bank's going to want some post-closing liquidity too. So again, it goes back to being undercapitalized. So I agree that anything under 100,000 is going to be an exception to the rule. And I'm personally going to probably want to see that person needs to be in the day-to-day of the business 40, 50 hours a week, because nobody's going to treat the business as well as the owner is. And they're going to have a higher probability of success if everything's riding on that for them. Now, again, as long as they're self-aware and they have the skill set, they have the work ethic, those things are going to make them successful. But I think it's really important that people don't, again, you talked about 8 to 10 hours. People like the idea of a passive investment. And I hear them all the time. I've not seen many passive investments. Throw your money in the stock market is literally what I will tell people. If they say, I don't want to do any work and I want to make money, don't buy a franchise. Go buy real estate. Go put your money in the stock market. I have not found a model that is absentee ran in a franchise, no matter what the franchisors may claim. I'm not saying they're not out there. I just haven't found them personally, or feel confident enough to say, yep, that would be a great franchise concept. Because again, why are they franchising if they don't need anyone to do the work? That's my disconnect there. It could be some head trash, but I just really encourage people to think, whatever time you think you're going to need to spend into it, budget more.
So, boy, we haven't been able to get past brokers yet. There's more ways. I had, just on that point that you just made, I was talking to a broker consultant about 3 years ago, got into a big argument with him. Not real big argument, but I'm like, dude, are you serious? You think that this thing's absentee? It's like, yeah, they have the manager for you, and all you do is just put up the money, and this is awesome. And he was a consultant. He's like, yeah, so I've helped a ton of people get into this thing. This is amazing. And I'm getting into it myself. So he believes it, right? So he believes, he's not just trying to sell it just to do it. He believes it. And then a year later, I'm like, dude, how's it going? He's like, don't know yet. Don't fully know. I'll know in a little bit, but there's been some bumps in the road, which bumps in the road are okay, because there's always, anytime you buy something, there's going to be bumps in the road as a business owner or whatnot. And then 2 years later, he's like, I'm giving these away. I'm out. I'm giving these away. They are not able to do what they said they were going to do. And I'm out. And he lost a ton of money. I want to say 7 figures. I want to say high 6 figures, maybe 7 figures, because he believed it. So here's a broker selling this to people. Now, helping people look at it, not necessarily selling it, and then bought the drink the Kool-Aid himself, and then realized it was bad. Good thing about it, he realizes it and he's changed his way. And so I'm like, okay, good on him. But the point of it is, there's a lot of people in the, that got hurt because they believed it's semi-absentee. And I do a lot of passive investing, and there's a reason that's called passive investing. Like there are people out there running it. I don't know why a franchisor would need franchisees to be the passive investor. Like raise money
Yep.
and open them up like that. It's not a franchise. So there's something that I don't understand with that. And it might just be my lack of knowledge or my own, like you said, own head trash. And there might be stuff out there right now that is what they claim it's going to be. But based on what I've seen, I have not seen it work yet. I haven't seen everything, but what I have seen, it has not worked, has not turned out well. And I would want to see it like 3 years down the road. The problem is all the territories are going to be gone. They're going to be gone, but then they're going to come back.
Right.
There's very few franchises out there, Bobby, that have sold out all their territories and there's nothing available anymore. Most brands, they sell out and then people aren't opening them. Even successful brands sell out, and then you can buy out other franchisees, and there's free territory, not free, there's available territories to purchase. That's something that I learned the hard way. I tried to buy too much at one time. Yeah. There's only really one brand I think that I know of that you can't really do that with. Little Orange Theory, you can't do that because they have area developers and they're sold out. And then Crumble, it was really hard to get in. But now I see stuff starting to become available with that brand. So you might not be able to get. So it's a risk. It's a huge risk to get into a brand that's really not that proven. Proven with one or two is not really that proven. You have to be somebody that is a risk taker to get involved with a brand like that. And there's big paydays when it pays off. But if you can't risk that much, you don't have that high risk tolerance, then wait. And you might lose out on the best thing in the world, the 1 in a million, the moonshot. You might miss out on it, but I've only seen that happen once, and that's Crumble.
Well, the people that are taking those moonshots, those are the ones that win. You talk to the first franchisees with Crumble, the first franchisees with Orange Theory, like they joined before it was proven too. Yeah. They knew they were taking a higher risk, and they got a higher reward. They got the best territory. Sometimes they got preferred area developer agreements and things like that, so they can develop it. But you mentioned a great point. Like you may be passive, but you guys have an active partner in the business. And I've done that before as well. I've been the active partner when there were passive investors running franchises. You need somebody running the day-to-day, and I like them to have skin in the game. Again, if a franchisor tells me they're going to give me a general manager and you're going to pay them this much, like what happens if they leave? Like they have no incentive. And so, the dream's free, the hustle's sold separately.
Thanks for listening to the Franchise Secrets podcast. Links to everything can be found over at franchisesecrets.com. And if you want my help with anything from starting your own franchise to growing your current franchise business, please visit scalablefranchise.com.